Hi guys and welcome to the trading show. This week we are gonna talk about
markets, metal surge, our portfolio, continuing gains on gold, tip of the week, mid-reverting on General Electric, and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. It has been a positive week for the financial markets. We almost only see green signs, so positive returns on all the different financial sectors. In particular, the metal sector has risen the most over the past 5 days. We see silver with a return of 6.30%, platinum above 4%, copper about 6%, as you can see it is in a strong uptrend, and finally we have gold with an almost 4% return. If we turn to equity indices, the situation is a bit different. We are in a sort of lateral phase. The Nasdaq is the weakest of all the indices, while the European markets, in particular the DAX, seem more positively tuned. The bond sector has risen. You see we are recovering from the decline of the previous months. This is the T-bond, this is the Treasury note, and this is the European bond. Energy futures have positive returns with the exception of natural gas, which is slightly negative. Positive also soft commodities, cereals, which are doing well since a couple of weeks. Currencies are also positive, while Bitcoin remains flat. As you can see, it hasn't moved much in the last 5 days, at least compared to its usual movements. However, the cryptocurrency sector certainly remains one of the strongest. In particular, Ethereum is rising a lot. On the volatility front, we see a slight increase in historical volatility, especially on European indices and in the short term, but in any case it remains relatively low on the long term. If we take a look at implied volatility and therefore at the volatility indices on the SPX, the situation is quite similar to the previous week. Also here we notice a slight increase in volatility, but we are still in full contango, and the current situation doesn't scare financial operators. In fact, there are no signs of fear for the future trend of equity markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week, as the last week, I want to talk about the gold futures market, which has performed really well during the last months. And in particular, I will show you two strategies, one trend following and one bias. We can start from this first trend following strategy, which enters when a cross of two moving averages occurs. And in particular, this strategy was developed on a 15 minutes time frame. We recommend usually to trade, when talking about indicators, to use at least a time frame of 30 minutes. That's because in general sometimes this may cause some noise in the market, but in this case the two moving averages are quite large, and so we don't risk to see in live trading a trade both long and short on the same bar that, as you may know, can cause problems in live trading. Said that, we can see that during the last week the strategy took a very nice profit target, of course with also some we can say flat trades, insignificant in a certain way, and then took with this long trade a profit target for an amount of $5,000. And thanks to this trade, we can open the strategy performance report. The strategy managed to recover from the drawdown and reach near its equity peaks. Now we can move to the next strategy that I want to show you. And in particular, I've shown this strategy also last week, and it is continuing to performing really well. We can see that it managed to make a good long trade for an amount of $800, and the previous one was a loss, so it was a stop loss, we can say, for an amount of minus $700. This strategy, as said, is a bias strategy that enters long in the second part of the session, and it closed the position at the beginning of the next session when a breakout occurs of the last 3 bars that, as said, are hourly bars. So we can be happy of this market that made us really feel bad during the last years, like 2017 and also 2018. But also looking here at the equity curve, we can see that these type of strategies, so both the bias and also the trend following, are recovering from the losses that occurred during the last years, and in 2020 and also in 2021 are looking very good, and so I recommend to you guys to use also these kind of strategies for your portfolios.
Hi everyone, and welcome from Andrea. Today we will have an additional look to the American stock market, and in particular we are talking about General Electric stock. What I've just tried to apply one of my templates, and I created then a new template for this stock. And today we are trying to go mean reverting on General Electric, one of the most known ticker of the US American markets. In very few words, I tried to code a trigger I've never used previously in the most recent episodes, and in particular we are going to enter in on the previous day's highs and low, and in particular on a price channel on the latest 2 days, and we will use as a stop loss 5 times the ATR, so the average true range calculated on the latest 20 days, and a profit target, so a take profit that is 4 times the average true range of the latest 4 session calculated on the 20 days. Okay, so I've tried the optimization as usual, but as you may see here, the total trades columns is quite poor, considering also the fact that we are working from January 1st 2000, so in approximately 20 years there had been very few trades, in my opinion, so the strategy is not that stable, and I wouldn't trust that much this kind of strategy, at least at this point of the development. In fact, here we can see the first result shows 139 trades in almost 20 years. That it's a very poor number, in my opinion. But the interesting fact is that it seems that the short side of the strategy is better than the long one. So it may be interesting because I have never found on the other major stocks this kind of behavior, and usually I have never traded the American stocks on the short side of the strategy. I just traded usually them on the long side only. So it may be interesting to go more further in the details and to develop something more in the details. And I will show you just the results at this initial stage of the development. The equity curve seems to be quite nice. Of course, it has had some very bad and difficult periods, like here, or in the last part of the historical data considered here. And also the long side is not that good in the last part of the equity curve, but it has been compensated by the short side that has been brilliant in the very last part, even if the results of this part is given by very few trades. And in fact, if we have a look to the average trade and the total trade analysis, we can see that we have in almost 20 years just 67 trades on the long side and 72 trades on the short side. And as I said previously, in my opinion, it's a very low number of trades, and I would suggest you to improve this strategy and to allow this strategy to work more. So you can work, of course, with this kind of idea, but with the aim of letting the strategy to operate more, because as it is not that safe, in my opinion.
No rollovers scheduled for the next week. I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.